Good morning, everybody. You are watching live Daily Market Outlook for Thursday, 21st of March 2013, prepared by Windsor Brokers, with the Cyprus issue being again the top headline in the world markets. But so far, if we take a look back in the past few days when basically the crisis emerged and they came out, there is no significant, if we take out, of course, Monday's gap opening, gap lower or higher opening, depending on the instrument. There was no significant movements. Most of investors basically are now sitting and in sit and wait mode to see what will be the final solution for the Cyprus. So far, there is no signals of any workable solution, as heavy diplomacy and the negotiations are still underway. The Cyprus is now considered nationalizing pension funds and ordered banks to stay shut until next week. The latest news we had here was that the banks will be closed until next Tuesday to avoid the financial chaos after it rejected the terms of European Union bailout and turn to Russia for aid. Again, the negotiations with Russians are again underway, and according to yesterday's comments of Finance Minister Saris, there was no solution found and not anything agreed until now. But the negotiations continue. Crisis talks among the political leadership in Nicosia are set to resume early this morning after late night meeting to discuss so-called Plan B that broke up on Wednesday without result. Your officials now voiced frustration but little sympathy for an ambitious but no-bust banking system that extended itself well beyond the island, and Russia, whose citizens have billions to lose in those Cypriot banks, called the EU as a bull in a China shop. Yesterday's comments from European Union officials were very clear and saying that Eurozone is and European Central Bank, as President Draghi said in this recent speech, is ready to do anything in order to keep stability in the Eurozone. Of course, the help for Cyprus will be provided immediately. Immediate liquidity will be provided to Cypriot banks, but only under the previously agreed conditions, as European officials hold their firm stand regarding this matter. To confirm this, yesterday's comment by Austrian Prime Minister, who said that this is the only way, and in the worst case, the European Union is ready to pull out the plug and disconnect Cyprus from its monetary union. That is quite a bad scenario, but all cards are now on the table, and the heavy negotiations, as I said, are still underway, as the country is in the worst crisis since the Turkish invasion in 1974. So far, the life in Cyprus goes more or less normally. There is no any signs yet of any problems, as the money could be withdrawn from the ATM machines, and people are not that much frustrated as I could see myself going around. But of course, the main subject, and everyone is talking about this crisis, and we believe that workable and good solution will be found the soonest. From the other important releases that we had yesterday was, of course, the Fed's meeting, and the Federal Reserve on their yesterday's meeting pressed forward with its aggressive policy stimulus despite improvements in the U.S. economy. This is what we were talking yesterday, pointing to still high unemployment, fiscal headwinds out of Washington, and risks from abroad, meeting as turmoil in Europe took another turn of the worst. The U.S. Central Bank appeared unfazed by concerns that its $85 billion in monthly bond buying could disrupt financial markets or inflate asset bubbles. The Fed's policy setting committee nodded to brighter economic signs in the United States, but Chairman Ben Bernanke said that he had not yet seen meaningful changes in the troubled labor market, and noted that tighter fiscal policies one reason to the central banks has been so aggressive with the most of Fed policy makers believing that the purchases of treasury and mortgage bonds are lowering longer-term borrowing costs and providing meaningful support, economic growth, and job creation. These are the words of Ben Bernanke on the news conference after the central bank announced its decision. Just to mention, as we could have seen, markets did not have any significant reaction on the Fed's meeting, and the most of major instruments and commodities stayed within their ranges that were established since Monday opening. From today's releases, we have quite a busy day today, and the calendar is full for today's releases. It's a PMI day, and a lot of PMIs are released or due to be released. The HSBC flash manufacturing PMI from China for March came out better than expected and better than the previous 50.4 release. 51.2 was the forecast. 51.7 was today's release. Trade balance in Switzerland shows surplus of 2.1 billion Swiss francs in February compared to 2.13 billion Swiss francs in the month of January, and the forecast was 1.87 billion surplus, so beating the forecast but still below the previous month. Release services and manufacturing PMI releases started from France. Manufacturing PMI for March came at 43.9, exactly the same level of February, below the expectation and forecasted at 44.4, while flash services PMI for March came well below the previous release, and the forecast 41.9 was released compared to 42.7 in February and 44.1 forecasted. Swiss National Bank quarterly bulletin for the first quarter is due at 8:30 GMT, and then at the same time we have German PMIs. Forecast for manufacturing one is 50.8 compared to 50.3 in February, while services PMI is forecasted above the February's release of 47.3. Forecast is 48.2. Follows the Eurozone release at 9 o'clock GMT. Again, more optimistic are the forecasts, 48.2 for manufacturing versus 47.9. and 48.2 the same for services PMI compared to 47.3 of February's release. Positive forecasts do not mean much, as most of, basically all of them except the German manufacturing PMI are still below the 50 barrier that divides contraction from the growth, and there's still a negative outlook is seen on Eurozone economy and the French economy particularly, that is showing quite low figures as long as we are holding below 50 level. Following after the PMI's 9:30, we have data from UK retail sales for February are expected to improve 2.5% compared to contraction in January of minus 0.6%. Public sector net borrowing in February is showing growth by 8.4%, increase by 8.4%, pardon, 8.4 billion sterling compared to minus 9.9 billion sterling seen in the month of January. Industrial order expectations for March are due at 11 o'clock again from UK. Minus 16 is forecast compared to minus 14 in February. And then data from United States and Canada retail sales, Canadian retail sales are due at 12:30. Again, improvement seen in January 0.6% by 0.6% versus minus 2.1% in December 2012. Also, the core retail sales are forecasted at 0.4% versus minus 0.9% in the December 2012. House price index from United States due at 1300. The GMT January release shows forecast at 0.7% versus 0.6% in December 2012, and the flash manufacturing PMI from United States at the same time for March is forecasted above the previous 54.3 February's release at 55.1. US jobless claims, that is the wrong time. It should be 12:30. I do apologize for this mistake, as it comes along with the Canadian retail sales are showing according to the forecast, some increase in the claims to 343,000 compared to the 332,000 record low in the last week's release. 1400 GMT Philadelphia Fed Manufacturing Index for March is forecasted at minus 1.6, much more optimistic from the previous release of February, which is minus 12.5. And existing home sales at the same time from the United States February release shows 5.02 million forecast compared to 4.92 million on the release from month of January. So basically full calendar for today. A lot of releases, important releases to be seen. We have to keep an eye on these releases to see what impact will be done on the markets upon the release. We have some comments. I will leave it for the end of session if you don't mind. I can see your comments. We'll leave it. Let's first go through the market and technicals, and then we will move to the comments and questions. I know that you have a lot of things to say. We are discussing this crisis every day here, and of course, as most of us being in the industry and being in the economics have good solutions, but unfortunately the reality is something else, and we are not in the position to make any decision. This is left for the politicians, and we believe that they will find the best solution for our country and for all the countries that are currently hit by this crisis, especially focusing Spain, Italy, and Portugal. From the technicals, as I said at the beginning, no significant changes following, let's say, talking about Euro. Monday's gap lower opening and a dip to 128.42 on Tuesday has established a certain range that is so far holding. On the upside, we have approximately 130 zone that marks near approximately or exactly 61.8, near 61.8% retracement of the entire fall from Friday's high at 131.06 to 128.42 low of last Tuesday. Sideways movements still seen in the euro-dollar's recent movements. Of course, pressure is evident as if we go to the larger picture, then we will see that the pair is in the firm downtrend and keeps the downside focused for now. But on the lower time frames, especially the hourly, further consolidation is seen quite likely as I do apologize. Lack of momentum to clear 130.00 will still keep the price entrenched within the range, while the break above 130 seen as a break point for bring more bulls into play, and the signal bottoming at bottom at 128.42. 4-hour structure is quite negative at this point, as all indicators are well in the negative territory and pointing lower, with descending 55 days exponential moving average so far capping the upside and seeing not much prospect according to the technical outlook, current technical outlook, not much prospect towards the upside. The notion is supported also by negative tone seen on the daily chart, but so far 200 days moving average contains recent dips and provides quite good support for the pair. However, a lot of work seen on the upside that is required in order to improve the current situation. As we said, break above initial 130.00 would bring some more positive tone into the near-term price action. However, on the upside, we need to see the break above levels at 131.06 and 131.33 last week's peaks in order to pick up recovery and avert immediate downside risk in favor of some stronger corrective action. Until then, I would say that more pressure is still seen towards the downside, as loss of the downside support at 129 seen as a psychological and round figure support would again bring a more negative tone and probably shift focus again towards recent low at 128.42. What is near this is also the 200 days moving average, below which 128 will be seen as the next target. As said, still no clear direction for the single currency in the near term movements, as no decision and no solution found for Cyprus yet, and most of investors are on a sit and wait mode to see what will be the final decision in order to make their trading decision and resume their positions. A similar situation is with the sterling, that is entrenched within the narrow range defined on the downside by 150.70, on the upside by 151.40, with yesterday's jumps and spikes up and down following release of UK data could be seen technically as a noise. And if we filter them out again, we'll have the clear range that is currently upper boundary is currently under attack. Beginning of European session usually brings some more action in the market. It seems that hourly indicators start to wake up slightly, pointing higher, while the situation on the 4-hour is still holding a positive tone and still sees a room for possible further extension higher, as the upside has so far been limited at 151.75, just ahead of a more significant 152.20 zone. Break of these levels basically is required to shift near-term focus higher and to confirm the near-term base at 148.30 and allow for some stronger reversal of the larger downtrend that commenced at 163.80, 2nd of January annual peak that so far retraced 61 dip to 148.30 and retraced 61.8% of the larger rally from 2009's low and high at 135.01, pardon, and 170.41. However, more negative tone is still seen on the daily chart, but improving, moving up, pointing indicators now are seen supportive for some stronger action higher, as break above initial 152.20 will be seen as a trigger. From the other side, the dollar-yen maintains a positive tone following a break above the triangle consolidation and triangle resistance that was at approximately 95.35, as well as a lift above a previous recovery peak at 95.73. This is 19th of March high, establishing now the uptrend that commenced from last Monday's low at 94.30, following up a lower opening. And so far, the rally retraced approximately 76, slightly above 76.4% of the entire 96.58, or if we take it from the whole down move pullback from a 96.70 recent high of the dollar yen, then we're talking about exactly 76.4% retracement. Pullback of fresh high posted last night at 96.12 is seen as a technical correction, as the hourly indicators, hourly RSI moved into the overbought territory, and currently so far finding support at 96.65. This is approximately close to the previous high, and ideally this pullback should be contained somewhere around this area, 95.70, 95.50, where we have the 50% retracement of the entire down leg, as well as 55 days exponential moving average. Ideally, at or above these levels, the base should be built in the lower top left in order for further extension higher. Still clear break above 96.12. That was the recent high, and the previous peaks at 96.25 is required to confirm the bullish action and open the upside, the next upside targets and the key barriers at 96.55 and the 96.70, which is the highest seen so far, posted on 12th of March 2012, in order to resume to end the near-term corrective action of 96.70, confirm the higher low, and resume the larger uptrend that is still intact, and the upside remains firmly in focus, with the 96.70 and the 97.00 seen as the next upside targets. On the downside, on the hourly chart, supports as follows: 96.65, 96.50, and more significant is 95.20, which is the trend line support, trend line drawn of low at 94.30 through lows at 94.71 and 94.82, valid bull trend line break of which would bring a more negative tone into the structure, while loss of the last Tuesday's low at 94.71 will again shift focus down towards the recent low at 94.30 and risk further extension lower. Aussie dollar remains unchanged in past couple of sessions. Similar to euro, we had a gap lower opening, and then the fresh range has been established. On the downside, 103.42, on the upside, 104.08, the 104.04 seen yesterday. No significant changes at this point, with the rather neutral tone seen on the hourly chart. Similar to euro, also on the daily chart, 200 days moving average so far holds the downside protected despite a few spikes lower. The price still holds above this indicator, and the positive tone that dominates on the daily chart sees more potential still towards the upside, as the limits, the gains were limited at 104.12, which is exactly 61.8% Fibonacci retracement of the entire down leg from 10th of January's peak at 105.97 down to 4th of March low at 101.14. The downside being protected by 200 days moving average, while upside being limited by 90 days moving average, with the positive tone seen on the daily indicators still keeping the upside favored. As said, the hourly structure is neutral, and shows no direction at this point, while a slightly positive tone that is still held on the 4-hour chart keeps the focus, keeps the attempts, hopes for a possible retest of levels above 104 in play. However, lacking momentum at this point is seen as the element that limits the current gains, and most likely the further sideways movement will be seen until either side of the break of the range is breaking. On the downside, as said, we have 200 days moving average, as well as 103.42, which is the range low, reinforced by 55 days, ascending 55 days moving average of the 4-hour chart. On the upside, we set recent peaks at 104.12, 104.08, reinforced by daily 90 days moving average. Basically break above or below the range will establish a fresh direction. As said, 4-hour indicators are still slightly positive, but losing traction that might bring more risk in the near term towards the lower boundaries of the recent range. As I mentioned at the beginning, the commodities came under increased pressure, as gold yesterday tested 106 support, dipping as low as 1600 support. 1601 was tested on yesterday's spike. Basically, this was a brief reaction on the FOMC decision, with upside there being still out of reach, but the near-term structure is looking for a test. 4-hour indicators are still holding a positive tone and keep the focus at the upside. The levels, we have the recent high posted on Tuesday at 1615.50, and then more significant is 1620, which is the high of 26th of February, as well as 50% of a larger 1684 to 1554 descent, and this is seen as a break point requirement to confirm the recovery and the open way for a stronger rebound higher. As we can see, the bounce of 1554, recent low of 21st of February 2013 has so far been limited at 50%, and on the daily chart this resistance is additionally pressured by descending 55 days exponential moving average. Overall, positive tone still seen dominating, but of course requirement is seen for a break above 1620, 1625 in order to confirm recovery, while risk on the downside will increase in case of losing initial 1600 support. That would allow for a further reversal down towards 1590, and then we have 1580, 1576 not to go lower. That will be signaled in case of loss of 1600, that will be signal that the yellow metals price will still stay within the range that is defined on the upside by 1620 and on the downside by 15 approximately 1560 65 levels. And finally the crude oil. Seems that we have small problem. I do apologize for this. I have lost some of the settings. We have moved to the May oil, and for some reason the settings have changed, and I stayed on April. Give me just a second, please, to change these settings to the front month, as April has expired 2 days ago. Okay, now we are ready. We are not ready yet. Now we have them all. Okay, let's start with the daily that still holds a positive tone following the bounce of 89.35.55 double bottom, but gains so far been limited at 94.45 by daily 55 days moving average, and currently we have the price ranging between the 90 days moving average, which is at 92. That also marks a strong support and the near-term base. On the upside 94.45, it's 55 days moving average. Lower time frames for our chart indicators are running out of steam and losing traction following upside rejection at 94.45 and steep reversal down to 92.35, just ahead of 92. Strong support with the limited recovery being capped at 93.58. So far as we can see that most of indicators are pointing lower and breaking into the negative territory that at the end might signal some stronger pullback of the recent recovery rally. Down we have support at 92.50, that is 38.2% retracement, already been dented several times, and more significant is 92 zone where we have 50% retracement exactly at 91.90. So far for our 55 days exponential moving average holds the downside, but set descending indicators as RSI is now breaking below its midlines, below its 7 days moving average, and moving lower from the neutral area. MACD is attempting through the midline. Momentum is already below. Overall, more pressure seen towards the downside at this point, and of course the key support standing at 92 zone, break of which will be signal of the near-term top at 94.45, and may allow for a deeper reversal. Hourly structure is again losing, running out of steam, as all indicators are again pointing lower, and again seeing more risk towards the downside. As we said, the limited recovery up to 93.58 was all seen so far, and basically more focus, more pressure is seen towards the downside. Supports are set 92.35, 92 zone, where the good support has been found in recent trading. We can see that this level hasn't been taken out so far, but in case of a break lower, then that will be a signal for a further extension. As we can see on the 4-hour chart, we're talking about congestion and the more likely sideways trading rather than trending, as we have the upside and downside limits at this point, and we can say that the oil is congested within the 92 and 94.45 range, with the pardon, break of either side seen as a trigger for the defining the fresh direction. Like most other instruments, investors are still awaiting and keeping within the certain range, awaiting the verdict, final verdict and the decision from Cyprus. That is number one driver of the markets in past couple of days. We believe that we will come out of this popularity very soon and let the other guys drive the markets with their own news. That was all from my side for today. As we said, we have some questions to answer to you. So we're going to start our questions and answers part. Let me just read. Okay, I'm not going to read it, but it's very good comment why United States are not helping Cyprus. I really don't know. Most likely they are busy with their own problems, especially with the labor market. However, it's quite a good point, but I believe that European Union will follow the same steps in producing more money in order to support cash-strapped and struggling economies. We believe that there will be some good solution found in the near term in order to prevent any further problems. So far, as I said, the life in Cyprus is going well, and we are not that badly affected. No one money has been touched, and this is the most important, and the most likely this is going to stay like this. Is there any other question, please? No? Okay, in that case, keep an eye on the news as heavy the negotiations are underway in Cyprus, and as this is the main driver, this is going to be the best indicator for you. Of course, also keep an eye on today's calendar as releases of a number of important economic indicators that are due today could be also seen as good market drivers. We're back tomorrow. Again, is the last day of the week. Expect to see you again with us at our regular time at 8 o'clock GMT, 10 o'clock local Cyprus time. Until then, I wish you a nice Thursday and successful and profitable trading. Good luck.